Hello friends, welcome to Business Learnings. This video is about the rights issue by Reliance Industries Limited and whether you should subscribe to it. If you do subscribe, what kind of profits can you expect? What kind of profits can you make? Historically, I have been quite bullish on Reliance Industries. I had made a video on when Reliance was trading at 1,000 rupees. I had given a recommendation of strong buy, and now the stock has reached to 1464 levels. That would have given you a profit of 46% in just 2-3 weeks. So please do not miss out any of my videos, especially on Reliance Industries. Now, yes, let's try to understand the rights issue. Okay, so Reliance has said that for every 15 equity shares that you are holding of Reliance Industries Limited, you are eligible to get one more share at just 1257 rupees, right? So this means that you are getting a discount of 15% if the share prices do not fall. Let's assume for a moment that stock prices do not fall or rise for some moment for understanding the rights issue, and then we'll try to understand what could happen if it moves. Okay, so if it does not move, you are getting a dilution about 6%, right? About 53,000 crore rupees is being raised by the rights issue. Current market cap of Reliance Industries is close to 9 lakh crore rupees, which means that additional 6% of equity shares is going to be poured in. Okay, which means the supply of shares is going to increase, the demand of shares is going to remain constant, and this means that the dilution in value will be seen. How much dilution? Since 15%, 1 in every 15 means about 6.67% of dilution will be seen. But since half of this money is being poured by, half of the shares is bought by the promoter group itself, because promoter owns half of Reliance Industries Limited. This means that 6% is not the actual number. It should be 6 by 2, which is 3% of dilution. So you are not getting a discount of 15%. If you just calculate it, 1464 minus 1257, that will give you a discount of 15%. You are not getting exactly a dilution discount of 15%. You're just getting a discount of 12%. You got that right. Please rewind if you did not get it. Okay. Now, whether you should subscribe to it or not, I think you should subscribe, because whenever there is a rights issue, you should always look after whether promoters are going to take part into it. And Reliance has mentioned, the chairman Mukesh Ambani has mentioned that they will subscribe to their part of the rights issue, which means they are holding 50% of Reliance Industries. So they will be pouring in 26,500 crore rupees, and whatever the amount of shares, whatever the amount of rights which remain unsubscribed by the common investors, they will subscribe for that as well. Which means the promoters are quite confident at this level, at this 1257 rupees level, which means that the stock is going to perform very good in the long term. Okay. Now coming to the results, the recently declared results, because they are going to impact a lot the near-term value of Reliance, the share price of Reliance. The quarter 4 for Reliance was not pretty good. The net profits were just 6348 crore rupees. Last year it was more than 10,000 crore rupees, 10,600, 700 crore rupees. And this is because of the shrinking petrochemical business. The demand was not there. Crude went into negative. Consumer discretionary products are not being demanded due to lockdown. Packaging demand is getting affected. So main customers of this petchem business is the businesses itself, which have been shut down, which have been closed, and that's why that had been impacting the volumes, that have been impacting the revenues and profits of the petchem business. But on the brighter side, Reliance Jio and Reliance Retail have done exceptionally well. As a matter of fact, Jio posted a net profit of 2,300 crore rupees. Actually, if you see quarter on quarter growth, it is 74%. If you see year on year growth, it's more than 200%. The dilution in the petchem business is a one-time thing. As soon as this coronavirus pandemic shuts down, this goes away, we will see a boost in demand and things will be back on track. So this is just a 1, 2 or 3 quarter thing at max. So a value is not destroyed here. Some value is destroyed, but a lot of value is intact in the future. Since we know that a value of a stock is primarily dependent upon the terminal value, right? You know, when you calculate when you try to project the earnings of a particular stock to get to its intrinsic value in the discounted cash flow method, you project the earnings for all the years, and then you, after 5 years, you just take the terminal value, which accounts for the most value of the stock, and probably 85-90% of the value is there in the terminal value, the earnings after 5 years, and that is not being impacted here at all. 2-3%, yes, about 2-3% of hit could be considered, but that is it, guys. So based on my understanding, I will still buy Reliance Industries. Now please consult your financial advisor before making any investment decisions. Thanks a lot for watching. Please post below any comments if you have any questions. I'm not quite sure how much of this video could you get, but I hope you enjoyed the video. Thanks a lot for watching. Bye.